I did a video about a profitable strategy that buys the stock indexes at the end of each month, usually before the end of the month, and selling a couple of days after the beginning of the month is a very profitable strategy. And there are some fundamental reasons why this strategy works. About 7-8 years ago, I heard of another pattern, which is buying the indexes when the moon is full. And the first time I heard of this, I thought it's some voodoo magic. But of course, testing proves that the strategy does work. Now, I need to preface this that any strategy that buys the stock indexes while mitigating risk usually will work with some drawdown. First thing we need to take care of is the moon cycle is not exactly like the monthly cycle. And there is a formula to calculate exactly when the moon is full. And I found this website that has the calculation for finding when the moon is full, and you can program that. In fact, I think he provides the Python code for it. But there is another easy way, which is to load all the dates of the full moon. So if you go to this site, Kaggle, it's free, and if you search for full moon calendar, then you can download this data set, which basically just lists the date that there is a full moon since 1900 all the way to 2050. So once you download the Excel sheet that has all the dates of the full moon since 1900, you need to convert those dates into something that your platform understands. Now I'm testing this using Power Language, Easy Language. So you need to convert the dates for something that Easy Language can understand. So you don't need to do this. I've done this already, and you can download the code in the community. Once the strategy is compiled, that's it. The code will buy every time there is a full moon, and then now you need to decide how many days you will hold that trade. So anything below 20 days is doable, and of course we will test that to see what is the best stable area. So here I have the S&P 500 represented by the ETF SPY. I'm doing the ETF because we have more data. So here the data is since 1993. And before I do the strategy, I want to compare it to the buy and hold strategy. The buy and hold strategy is not available in every platform, so you need to build it. And I build one here, so let me switch it on. So this is buy and hold. And basically I'm buying and selling every end of month. So it's the same place where I buy and sell. And so that way we can get all the data. So this is the buy and hold strategy, is making 417,000. This is starting from $50,000 in 1994. And the drawdown is 59%, which is $138,000. Now you might wonder, what is this buy and hold? So this is the representation of the buy and hold curve. Unfortunately, there is no data in that graph. Still, it's better than nothing, and you can see that my strategy that I built matches that graph exactly by buying and selling every end of month. So you can see they are both the same. The numbers are different, but they are exactly both the same thing. And we can see here since 1993, this is the 2000 dot-com bubble, the subprime crisis, and 2015 the flash crash, 2018 and 2022, which we have the drawdown, recent drawdown, and now we are in 2023. Anyway, so this is the performance. Basically we want to beat this drawdown. This is a big drawdown, 59%, and if our strategy is not beating that, then we might as well do the buy and hold. Okay, so I added the strategy, and so the strategy has 4 variables. The shift, which is the day before and after the full moon. So we are testing 10 days before the full moon. So we are buying 10 days before, 9 days, and so on and so forth, step of 1. All the way to 5 days after the full moon. And we are holding, this is our exit, between 1 and 18 bars. Remember, there are 21 trading days, and you cannot use 21 because then the strategy will behave like buy and hold. The stop loss and profit targets are 0. That means we are not using them. We will add them later on. So let's test this combination. We have 288. Let's optimize. So if we sort the results by the net profit, and I'm looking here at the top 30, and remember this is an ETF, so I'm using the full account to buy the maximum number of shares. This is usually the best way to test a strategy on stocks and ETFs because The price usually splits up, and by the time you test, let's say 1995, the price will be $1. So you cannot test with fixed number of shares. So we can see that the top 30 usually have a negative shift. In fact, if I look at this, only number 30 is 5 and number 28 is 0, which is buying when the full moon is on. And here we have number 16, which is 1. That means it's 1 day after the full moon. Everything else is minus. So that tells me the buying before the full moon is much better. And we can see that the top 10 strategies are split between -5 and -6. As for the holding bars, the top 10 is between 14 and 18. 14 is twice, 16 is twice, and 17 is twice. But going all the way to number 30, they are all above 9. 9 is the lowest number of bars. So -6 and 14 is the top, but it is sitting in a very stable area. So I have no problem of picking this one. And now we can see that our graph is much better than the buy and hold. Look at the buy and hold. We have these two deep drawdowns and then this one in COVID. And here we mitigated most of these. And also we are making more money, plus less drawdown. So all in all, we enhance our buy and hold by a lot. So it's very meaningful to do this strategy because you are making lower drawdown, making more money, and you are less time in the market. So the market data that I'm using is 29 years and 9 months. And I am in the market for only 21 years and 9 months. This is very important to keep in mind that enhancing the strategy is not always about net profit, although in this case we have better net profit, but usually is about less risk. So a better metric is the return to drawdown ratio, and that's usually what I use. But of course, there are many other metrics that you can look at: the average trade, the number of trades, and so on and so forth. So now we will test the stop loss and profit target. Now, the way I program this is in ATRs. So we will put some form of ATR. So 0, that means we're not using it. And 5, that means it's 5 times the 20-day average true range. So we will do it in step of 0.5. That gives us 121 combinations. Now again, sorting by net profit, the 0, that means we are not using it, is the best one in terms of net profit. But in terms of return to drawdown ratio, 5 ATRs, so 5 times the average true range of 20 days as a profit target is better than 0. And here I have another one, which is 3. That's also better. And in terms of stop loss, 4.5 ATR stop loss is good. This is meaningful. So 2.5 profit target and 4 as a stop loss. And you can see how I say it's meaningful because look at the return to drawdown ratio. It does have a big effect than the rest because remember, not using the stop loss and profit target, return to drawdown ratio was around 4. And here we have 614. But of course, we are making less money. But remember, the original strategy was making about 480,000. So if I pick this one, I'm actually still beating the original strategy and I'm making much lower drawdown. So this is the original strategy and this is my curve. And here another huge concept that I push always in my videos, which is strategy filters. Strategy filters perform much better job than stop loss or profit target. Now you can still use a stop loss as a catastrophic stop loss. So this stop loss means that if your biggest loss is 10,000, you can put a stop loss as 11,000. So I put back the strategy as -6 and 14. So the strategy right now making almost $800,000 with 32% drawdown. This is based on $50,000 starting capital. And our trade analysis, we are making 365 trades, on average $2,000 per trade, 66% win rate. Like I mentioned many times on the channel, the best filters to use are usually direction and volatility. This filter is part of my Algo Trading Masterclass. It's available for Strategy Quant X, Easy Language and Power Language for TradeStation and Multicharts, and MetaTrader 4. Both filters combined make the market regime. Now what I'm showing here is the version 2 of these filters, which will be included in my Algo Trading Masterclass version 2 coming out very soon. Version 2 has 3 states for volatility and 3 states for direction. So this is on the top is the direction, which segments the market either bull, bear, or sideways. And the bottom section shows the volatility indicator, which segments the market in 3 sections: quiet, normal, and volatile. So now by fixing the shift to -6, the number of bars to exit to 14, and we will not be using the stop loss and profit target, we will only optimize the direction and volatility. And like I said, these are 3 segments for each. 0 means we are not using them, and we will keep 0 so we have something to compare. So we have 4 states in each. That gives us 16 combinations. We can easily test them. This is our baseline, and our baseline is 65% win rate. We can increase our win rate to 73% by using the 3 and 3. That means bull market and the high volatility. And if I want to do the custom fitness, we can increase the maximum return to drawdown ratio by using this. So this is the bull market and not using the volatility filter, and still increasing the win rate. Now there is another way to look at these filters. Let's look at all these. All of them are making some money. I mean, this is 199. It's almost 0. But only this one is losing money. So this is one that means we are in bear market. This is one that means in quiet market. Quiet means the volatility is below average. So instead of using 1 and 3 and combining them, I'm just going to not be trading when I am in this market regime. So here is our strategy with both the volatility and direction filters applied, which is we are not trading when the market is quiet and bear. And you can see the quiet is this green and bear market is red. So whenever we have green here and red, when they match, we don't take a trade. We are now making 1.1 million, still keeping our drawdown at 33. So that is amazing. Our average trade jumps to 3,500. We increase our win rate. So all in all, we enhance most metrics. And let's look at our periodical returns. So losing 1 year in 94, 1 year 2000, 1 year 2008, and 1 year in 2022. And remember, this is our buy and hold curve. And now our curve looks much better and making a lot more money. So you see, filters almost always gives better results than using profit target and stop loss. Now they don't do it all the time, but if you have enough variety of filters, you will achieve this goal almost always. And I am adding more and more filters to my Algo Trading Masterclass version 2. I'm currently around at 700 filters. So the same strategy, buying 6 days before the full moon, selling 14 days later, and not trading when the market is quiet or when the market is bear, meaning moving down. The same strategy will work on all indexes. So this is currently the SPY. So this is the triple Q, and same strategy. We are not trading in bear market and quiet, and we are buying 6 days before the full moon. And this is our strategy. Based on $50,000, we're making 1 million, 252 trades, 63% win rate, almost $4,000 on average. And this is our yearly returns. And this is the Dow Jones. We're making 367,000. This is the buy and hold. And this is our curve. Our trade average is 1350, 67% win rate, 272 trades. And this is our yearly return since 1998. And as you can see, the full moon has the same effect on all indexes, which is extremely weird because if you check the dates of the full moon, they don't happen all the time at the same point. So the full moon will shift from day 1 of the month all the way to day 30 of the month during the years. So they don't fall always in the exact same place. To watch day of month strategy, watch this video and I will see you there.